All right, hey, what's up, guys? It's Jamie. I'm just doing a video about Iron Condors, short Iron Condors today. So I won't be visible. I'm just going to show you my screen. Now, I'm on a mobile phone, so desktop, laptop's a little bit different as far as display. But I do want to run through this because I know some people had some interest, and specifically I had a few friends that were interested in how this works. So I am not an expert. I'm not a financial advisor. I'm just kind of sharing what I'm doing and how I make and lose money. All right. So don't listen to me. It's just, kind of watch for entertainment purposes. All right. So I just came from a Mac store, an Apple store, right? Not a Mac store, an Apple store. I was looking at a MacBook Pro and I was looking at an iMac because I think I'm going to upgrade before the month's over. But for now, and I will continue to use the phone, it's just easy for me to jump on without all the fancy stuff. So let me just show you what I'm looking at today. All right. So I do have a picture of the Iron Condor right here. So if you go here, this is what the picture looks like. Okay. There it is. That is the diagram, I guess, of the Iron Condor with its wings, right? Oh, I guess. I know that's a horrible picture, but so that is how it's going to work. Okay, so I already did one. Let me show you the one that I have over here. So you can see I have a Tesla Iron Condor right here. That if the price of Tesla stays under $820, because there's going to say up here at the top $820 to $750. So that's my range. It's got to stay in that range between $750 and $820. And if it does, then I will retain my premium, which was $185, right? I believe, or $188. So $188. So that's what I made. $188 is in my pocket. Now I'm risking, if I lose, $315. Now, give or take, that's not exact because, as you saw, I was up $188 at the time, so I could probably lose anywhere from $300 to $300 and I don't know. So let's say $40 or so. So the probabilities are good that I will stay in that range, but there's certainly no guarantees. I don't know what the ratio is. I've done one last week, and I think I made $106. And the risk was about the same. So this had a higher premium and a little bit lower risk as far as like the ratio. It's almost I guess 40 to 60, somewhere in that range of I can lose. The chances of me losing at the ratio is a 60% greater of what I can gain, but I think the probabilities are pretty good. Now that's based on whatever happens with the stock, whether it goes up or down. It rallied today, right? It's up. Oops. Yeah, that's right. It's up 18% today. Oh, that is the option. Let me just go to the actual stock. So if I go to the stock itself, you can see it is up $33 today. And then if I look at, Webull on my watch list, you can see it's up. Tesla is up 4%. Okay, it's up 4%. And if I look at the chart, which again, I'm not a technical master, I can see it went as low, right, as 620, but over the past few days, I only need 2 more days. I want to make sure that it doesn't go below 740, I think it was, right? Or is it 750? Okay. So if it doesn't go below that 750 mark, 750 right around there, right? I'll make it a little bit bigger. That is as low as it can go before I lose the money. And then as far as how high it can go, it can't go over 820, right? 820, which it's about $10 away as I do this. And I'm just not exact, but pretty close. So that is the range that it's going in. Now, right now, it's above the 9-day moving average. It's above the 60-day moving average. So I don't know if it's going to get rejected. I mean, there's still some room there where it could get up to that previous high over the past few days of 840. And if it does, then I lose. Then I'm out. I lose the 300 and something bucks. And that's all there is to it. So, but that is how it looks, when I'm charting it out and I say, what's it been doing? What's the price action over the past few days? And that's what I'm looking at, so green candle, right? Then a red, then a red, then a red. Now it's a green candle. So now it's either going to rally up over the next few days and get over this previous 840, which means once it breaks the 820, if it expires it over that 820, then I lose. Okay. So that being said, if I go back to Tesla and I said, oh, you think I'll do another one, view option that expires in 2 days. I like to do it the day before personally, but I'm going to show you what it looks like should I do it before. Now, I learned this specifically this way I'm showing you through another channel, a guy named Henry. It's called Invest with Henry. He has some pretty in-depth stuff. I mean, he's showcasing $1 million+ account. So I just look at some of the stuff he does, and I like this explanation, which I'm doing my own way, and I'm just showing you how I execute it on a mobile phone, because he doesn't do it that way. He does it on a desktop. So if you have trade options, you get in here and you go, okay, I want to look at a certain percentage of where it's at right now. So, he says he uses around 88% or more. So I'm close to that range. I stay in that 88 range. So just to follow suit. So if I go, okay, first I want to sell the put, so I'm going to add one contract. You can see there it gave me a little checkbox, and then I'm going to buy a put right beneath it. Okay, so now I have that. So now it shows up as a put credit spread here at the bottom. Can't see it now because my little thing's over there, but it says put credit spread. And now I'm going to switch to call, and I'm going to go to sell right here at the top. I've hit call, and then I hit sell. And now I'm going to go above the strike price, which is right here. It's currently 813. Okay. Wow. It was just 810. So it just shot up $3 as I'm doing this video. And then I'm going to go up to the 820. So you can see right there, my current open contract, it has an 820 sell, for the call. And then I have a buy right above it. So if I go a little bit higher, if I say, okay, hopefully it won't go to 840, right? That's an 82% chance. Now you can pick whatever you want. I'm picking 82%, right? And then you can see buy is the next one, and I'm going to go right above that to the 845, right there. So I just had got the 840, and now I'm going to the buy, and I'm going to do that one right next to it. Okay, so previous to that, I did the sell. I did the sell first for the call, and then I just switched for this one. I went to the buy on the call right above it. Okay, so now I have a short Iron Condor showing up, here at the bottom, right at the bottom there. Okay, so now I'm going to go ahead and hit continue, and it's going to show you that of those ratios when it expires, which is in a couple days, and then that ratio that I was talking about. Now it's 128. It's right. Oops. It's 134. So it's constantly changing, versus 366. So the max profit, it says, is 134, and then the max loss is 366, which is not exact, and that's why I showed you this little picture here, where you can see the same thing, but it gives you like this this bar that you can use. Let me get rid of that. So let me blow this up. So the way it works is, if you're on a desktop, this little bar here, you can move it one way or the other, oops, that's horrible. Hang on. You can move it in one direction or the other, this little bar. So if you do that, the bar might be there, the bar might be there, wherever you move that bar, as long as you're in this green zone, then you are going to see that this number, the expected profit and loss, will stay the same if it stays in there in that expiration period. Okay, And then down there at the bottom, you can even see it. Let me see if I can get that off. Oh, there we go. I'm going to point down here, right there at the very bottom, okay? You can see the max profit, 185, the max loss, 315. The break even is 748 to 821, but really it's whatever that strike price is, which was the 820, right? And or the 745, okay? So that's just adding in for the premium, okay? So now I'm going to go back over here, and I'm going to say, okay, at 134 versus 366, or whatever it is, I'm going to go forward and say, yeah, I'm going to do one contract. Now, I can add contracts if I want to. I can always say, or what if I do more than one? I could do 2 contracts. Then the premium's going to change, but so will the risk. Like I can now it says that I could lose up to $720, or I could do, how about 4 contracts? Well, now I can make $578, but I can lose $1,400. So whatever your tolerance level is, whatever it might be, of where you're like, hey, that sounds pretty good to me. So long as I operate within, 760 to 840, I'm willing to do that. So if I was going to do that, which I don't know if I want to do that right now. I might actually wait till tomorrow, but I would go ahead and review, and it's going to give me my one last opportunity to cancel this or to move forward if I want to adjust something. So if I was to go ahead and execute this one contract that expires on Friday, as I do this, 7/29, and that's my range, okay? I have my range is not, if I use that, I'm going to have $591 available to do this. So it's saying that the Tesla price as I do this is 812. And I already showed you the ratio of where I need to kind of stay within, which was 840 to 765, like as a low of 765 and a high of 840. So if it stays in that range from its current share price of 812, if it doesn't go lower than 765 or higher than 840, then I'm in the money, and I'd make the $140 if I was to go ahead and do that. And it's going to cost me $500 to do it. If I wanted to adjust it, I would go back or go back again, right? If I wanted to make some type of change. All right. So that's basically how it works. If you're going to go ahead and execute, for me, I'm probably going to wait till tomorrow. Over the past month, you can see like right now it says that I'm up today $300, and that's because these 2 contracts. I'm hoping that this Amazon one expires under 127, which is the goal. It's at what's the current price? 119. So looking all right now. And if it does, then I just keep my premium, which wasn't a lot. I think it was let's see, where was it? The premium was $210. Okay, so that's what I collected. I thought it was a little less, but that's how much I have. So if it goes to 127, expires at 127 or under 127, I keep the $210. If by chance it does go over 127, then I would make the spread between 120 and 127, which is basically $700 because I own 100 shares. And then I'd keep my premium, so I'd make $900. Okay, and then I'd have my money that I invested in 120 shares, and I could repeat that. If it goes to $100 a share, granted my shares would be worth less than what I own them for, but I'd still keep this premium. All right, so I got that, so I'm not worried about this Amazon one. And then the Tesla one, which is the Iron Condor I have, as long as Tesla stays under 120 and over 750, then I'm in good shape. Okay, and again, the price right now is 814. Oops. So it seems to be rallying today. As the whole stock market seems to be going pretty. See it? Whoa! It just jumped up a bit there on the daily. So if I go to a 1 hour chart, then you could see this is the pre-market space. You can see it's kind of shaded blue. I like the black screen in that area, which looks. Let me do that again. In this shaded area is the after hours, which is that line right there. And then which is after hours, and then over here is pre-market, right? That's what's going on. So since the pre-market and even after hours, it is it's been rallying up right now, right? So it's been rallying up today, Tesla. And I'm sure there's some type of news or something like that if I was to kind of look into it. So it's heading up towards 820, but these are trends. It doesn't mean that's what's going to happen. It could certainly fall and go below that. I'm hoping it does because that's the play I made, but there's no guarantees. And one little thing I will mention is down here at the bottom, the RSI, it is getting high towards the 70. So if it goes above that, then I think I have a good probability that people will take profits and it'll drop down. But again, it can repeat itself. And if you look at that, it's that's the window of where it's been. So you see my little 750 to 820. But if I want to zoom in and say, okay, well, 769 and 842 is kind of like that new window. And what I mean by that is bang, and now is it going to go back up and bounce off of that? Is it going to do that? I don't know. Like, you can kind of follow and see, but those are kind of the things that I watch to see. So that's it. That's what I wanted to show you guys today. Hope everybody has a nice Wednesday. That's what it is as I'm doing this, and I'll see you guys next video. See ya.